Welcome to Dominate Real Estate Podcast, the $1 Million Blueprint where luxury meets expertise in the world of high-end real estate. Hosted by Taliya, top real estate attorney, and Carina, president of New World Connect Title. Stay tuned as we dive deep in the minds of top producing luxury real estate agents, uncovering the strategies, insights, and secrets that have helped them make millions. Get ready to level up your real estate game as we guide you through the latest market trends and the stories behind the most exclusive deals in the industry. This is the place where sophistication and success dominate.
Good afternoon. We have Ari Brody from Cross Country Mortgage. Thank you so much for being our diamond sponsor for the Dominate Real Estate Podcast. Ari, welcome to the show.
Thank you very much for having me. Looking forward. First time doing a podcast, so not quite sure. So if I make any mistakes, just give me a heads up.
No, I'm sure you will be smooth and natural. It's all good. So Ari, let's jump right into it. Tell us a little bit about yourself, your background, and how you got started in the mortgage industry.
Sure. So it's actually a funny story. Been in the mortgage business since the end of 2001. So I started it now quite a bunch of years ago.
Yeah.
I lived in Rockland County in a development, and I was looking for a summer job at the time. And I was selling Cutco knives door to door.
No.
I knew everybody in the development, so I was by one person's house in particular. I was giving the sales pitch, and he goes, "You sound like a pretty good salesman. Do you want a real job?"
Okay.
I said, "Sure. What do you got?" He goes, "Mortgages." I said, "What's a mortgage?"
Yeah.
And I started out in the mortgage business. I started out as a processor. Learning the business, went into post-closing, then worked for a bank for a bunch of years doing quality control, compliance, closing, secondary, and did a whole bunch of different aspects in the mortgage business, and then got back into sales. So I've seen a lot of different aspects in the business, and it gives me a unique insight and a different viewpoint than most loan officers because I've seen what goes on behind the scenes.
Yeah.
I've been through the compliance aspect. I've been through the underwriting aspect. I've been through all the different aspects that go on around the mortgage as well.
Yeah.
So it gave me a very unique insight, which has really helped me bring that to help my clients get their loans closed quicker and more efficiently and deal with the problems and complications that always seem to come up somehow.
So true. And, I love that you said that because you really need to know a business inside out. You have to work from the ground up because it'll make you that much more of a quality top producer if you know the back end, the front end, everything that, the underwriter is looking for, the processor is looking at. So that's really phenomenal that you are so well-rounded, in your business.
It served me well. So thank God.
Yeah. Excellent. So what is the most rewarding part of, being a mortgage broker for you?
Sure. So, everybody can close an easy loan, but when you have complications, when you have problems, when I get a call from somebody that's sitting there telling me they've been working with a bank for 3 months now, they haven't been able to get the loan closed, they're about to lose their deposit, they don't know what to do, they're all, frustrated, stressed out. It's the largest purchase of people's lives, and it's frequently the most stressful. Mm-hmm. So my focal point is making the process as stress-free as I possibly can. Mm-hmm. And taking away some of the stress. It's still a big deal.
Yeah.
But when I sit there and figure out and help someone solve a difficult problem or a difficult situation where they were denied by 3 other banks, and I figure out how to make that deal work and I get them closed.
Yes.
To me, that's a grand slam. I feel like $1 million. The client's thrilled. Everybody's jumping up and down. Everybody's happy.
Yes.
That's to me, that's the ultimate.
Absolutely. And that right there is what really, I believe, sets you apart, from a lot of lenders is that you have all of these creative financing tools. You have all of these different loan programs. You can approve an array of different borrowers, maybe a borrower that is, asset heavy, not as much income heavy, or maybe a first-time home buyer. So talk a little bit about Cross Country Mortgage and what sets you apart from other lenders.
Sure. So I've been at a bunch of different banks in my career. So I've been doing this 25 years now, roughly, so I've seen different types of banks, different styles. And Cross Country is very much focused on giving the salespeople the tools they need to be able to sell and close loans. I've been at other mortgage companies in the past where the mentality was, how do we protect the company? The company comes first, the salespeople are last. And that's from a salesperson standpoint and from a client standpoint, it's frustrating Because if they're analyzing a deal and saying, well, we could be super cautious here, and therefore the client can't get their loan, it's very frustrating across the board. Cross country is very different. The mentality is, how do we get the loan closed? How can we deliver? And how can we provide an excellent level of service to that client? So that's really enabled me to sit there and help take my career to the next level and help provide a super high level of service to my clients. Taking that even a step further is, as the mortgage industry progresses and changes and more products and programs come out, and particularly the non-QM products, which came out, make a huge resurgence in the last couple of years, cross country saw this as a way to service our clients better and give them more opportunities. And they went full bore. They went all out to make sure that we have one of the most aggressive suite of programs and products in that type, which really enable us to close a lot more creative solutions, a lot more different products and programs, and be able to deliver at a super high level for our clients when other banks might not be able to.
Excellent. Okay. Thank you so much for that. So that's a perfect segue, because talk a little bit about the different loan programs. You mentioned non-QM. For those of us who aren't familiar, talk a little bit about the different loan programs that you can offer borrowers.
Yeah. So you have the regular standard conventional loan. Borrower makes, his salaried employee, everything checks out. He gets a regular salaried, regular conventional loan. That's fairly standard, fairly vanilla. Everybody can do that pretty much. You also have FHA loans, which are a little more complicated simply because they're generally designed for borrowers that don't have as much income, that don't have as much down payment. Their credit is a little bit weaker, and there you can have some nuances, but again, still fairly vanilla from the mortgage industry standard. The next level of programs is the jumbo loans. High-end borrowers buying properties at high net worth. They have a lot of money. They have a lot of income. They're buying larger properties, taking out larger loans. And as a general thumb, most banks are very restrictive on those guidelines, and they get a lot more difficult. One of the things I like about cross country is we have no overlays and no extra restrictions for jumbo loans, which gives us a very unique ability to sit there where big banks potentially have problems. We can get it done. And last but definitely not least is the non-QM you mentioned. Non-QM is designed for borrowers that are making money, but for whatever reason, their tax returns don't show it. Self-employed borrowers, and they're writing off all of their expenses. So they're making $1 million a year in the business, but after expenses, it shows almost nothing. So from a loan standpoint, it's very difficult for them to get loans. We have a product which we can sit there and we look at 12 months business bank statements. 50% of the deposits is income and 50% is their expenses. So someone who's a restaurant, for example, to deposit $1 million into the business bank account over the course of a year, nothing crazy. But now I have $500,000 of qualifiable income that I can qualify a borrower at, regardless of whether or not the restaurant actually made a profit on paper or not. There's a bunch of different programs like that. There's programs for investors that we qualify strictly based off of the rent of the property, and we're not looking at what their income is. No tax returns, no W-2s, no pay stubs. You don't even need to document that you have a job. And you also mentioned that there's a lot of people, and particularly, in New York, there's a lot of cash borrowers. Mm-hmm. You have people that are sold a business, they're retired, they're trust funds, mm-hmm. whatever the case is, they're sitting on a lot of cash, but they're not employed in the regular sense, whatever it is. Right. And we have programs that we can sit there and look at. You have X amount of assets in the bank. You have 125% of the loan amount in the bank. You're qualified. Mm-hmm. No other income documentation is needed. So there's a lot of different nuances here, and a lot of people are not that aware of it, and they might think that the client can't get a loan. Right. There's a lot of programs available.
Yeah, no, that's phenomenal, because it sounds like you guys have a one size fits all, which I love, because, a lot of buyers will just walk into a bank, and might get denied by your conventional, everyday bank. But Cross Country Mortgage has so many different loan programs, so many, shapes and sizes that can really be customized for each individual borrower.
100%. Like you said, the big banks, they have their box. If you fit into their box, sometimes they're super aggressive. Yeah. And they can have really, really aggressive, really low rates, and they do a decent job, most of the big banks. Yeah. But if it's not really in their box, then forget about it. There's no deviation. There's no, there's no maneuverability. There's no flexibility there. So we have, like you said, a plethora of different products and programs. We can still make sure that client gets their loan closed and gets across the finish line.
Fantastic. Wonderful, Ari. So tell us about, what are the key steps in the mortgage application process that a buyer needs to be aware of or prepare for?
Sure. So there's a bunch of different steps in the process. There is a lot of moving parts. And it's super important that when a client is working on getting their loan approved, they're speaking to a qualified person, and they shouldn't wait till they're starting to make an offer on properties, now start working on it. Reach out in advance. You can set yourself up properly to sit there and make sure that you're getting that done properly. As an example, a lot of clients will send me their tax returns before they file them. Now, I'm not an accountant, and I don't pretend to be, but there's a lot of things that from a mortgage standpoint make a very big difference, but from an accounting standpoint don't matter. And that's one of the things that I do. I advise my clients in the aspects like that. But credit is very, very important. Making sure that you have the funds that you're going to need to purchase the property either in the bank already or know where those funds are coming from. So that's taken care of in advance.
Right.
Making sure that when you're dealing with somebody to get pre-approved, it's not just that they ran your credit, they asked you how much income you made, and they said, okay, here's a letter. That's meaningless. That's not going to get you very far.
Yeah.
When we pre-approve a client, we get all of their paperwork up front. I want to make sure that if I'm issuing a pre-approval to the client, I can deliver on it. The worst case scenario for me is not to be able to deliver on a promise that I make. If I tell a client you're pre-approved and I give them a letter, I want to make sure 100% I'm able to deliver on that.
Yeah.
And in order to do that properly, I need all of their documentation up front to evaluate it fully. And while sometimes it's a lot of paperwork, you're much better off doing it up front than waiting until afterwards and finding out now you have a problem and now you're scrambling and now you're behind the eight ball and you're already in contract. And what do you do now?
Exactly. That security and that reinsurance goes such a long way, because a pre-approval, like you said, it's just a piece of paper, right? But if you actually fully underwrite the loan and they provide all of the documents to you that you specifically asked for, you don't even need a signed contract or an appraisal, because you can already pre-qual or approve the borrower with a commitment letter subject to the property or subject to an appraisal. And I think that peace of mind for buyers is worth, 10 times, the amount of gold.
100%. And it's also important that, you're working with somebody that you have referred to and that you can trust. My job is not to protect the bank. My job is to sit there and make sure my clients can get their loan closed and get them across the finish line. So when clients sit there and have an honest, open conversation with me, oh, I have this potential problem. Okay, now I can figure out a solution for it. But if I'm not notified or you don't tell me what the problem is, or you go through the process at a big bank and you don't send in the paperwork up front, and now you're sending paperwork, and now they see something which is problematic, now it's much, much more difficult to fix that or avoid that problem, as opposed to being prepared up front to make sure to mitigate any potential problems and issues so the process goes through smoothly and efficiently.
Excellent. Let's talk about credit a little bit and how the mortgage industry has evolved and how credit plays a factor, because everybody thinks, oh, if I don't have 740 or above, I am not going to get approved for a loan. So can you shed a little light on how, things have evolved relative to that and how credit plays a factor in your job?
Sure. So credit is extremely important for a lot of different reasons. But the main factor that has an impact here on why credit is so important is because a lot of the rates are based off of risk-based pricing. And how do they determine how risky your deal is? One of the main things they look for is what your credit score is. So I've had people that had excellent credit. They've never missed a payment, and then they had a $10 collection from a cell phone company, and their credit score dropped. Does that borrower not A+?
Right.
The borrower's A+, but also their credit score dropped for a simple, silly reason. Yeah. And now they're going to pay a premium on the rate, they can pay a higher rate. And it's very, very frustrating to clients.
Yeah.
So there's a couple of things about that. I had a situation, it's actually a funny situation. A client told me, my credit is perfect. I use a lot of credit. I never miss a payment. And what did he do? He had a $100,000 credit limit on his credit card. And he used the full $100,000 every month and paid it in full every month. But he only had the one card and it was maxed out. His credit was terrible. Now, if you think about it, the guy's a great credit risk. He pays his bill every month in full. Yeah. Because he was maxed out, his credit was lousy. So it's very, very important to have at least 3 to 4 trade lines that are open and to use less than 40% of the available credit. One of the things that we do as a service to all of our clients is we review your credit when we sit there and get you pre-approved, and we'll do an analysis for free, and we'll tell you, if you sit there and pay off this credit card from $6,000 to $3,000, you get this, pay this, you have a collection, pay the collection off, you have this, whatever it is, we'll advise exactly what to do and what the steps are. And then we'll be able to get your credit score from a 660 to a 740 or from a 720 to a 740, whatever the case is. We'll let you know exactly what it is and what the cost is. And we do this as a free service to our clients.
Wow.
And now we're able to get them a much better rate and get them into the top tier from the risk standpoint of how it's qualified, even though and the reality is the client might be a great risk profile, but if their score is 739 instead of 740, it could affect their rates.
Amazing. Okay. I love that you do that. How far in advance, how long does that process take? And when should a home buyer reach out to you if they want to ensure that they can go through your program?
Yeah, so most things that we do is something that can be done fairly quickly and not a big deal. So we're talking timeline, we're talking 5 to 10 business days.
Okay.
And it can be done during the process.
Okay.
Now, that being said, there's definitely some situations where it takes a little bit longer. And if you're starting to look for a house, get pre-approved early. Don't wait till the last minute. I can review the credit, let them know what to do. I've had many situations where clients didn't have the credit profile at the moment. And I said, do X, Y, and Z. And then in 2-3 months from now, when you're ready to buy, your credit score will be higher and you'll be able to get your top tier loan and top tier rates and stuff like that. So waiting is not beneficial. There's no downside to applying it early and getting your paperwork approved in advance. It doesn't cost you anything. There's no cost. So there's no downside to applying early. And the only thing is, so you have to update some paperwork, send in some updated pay stubs. You file the next tax return, send in updated tax returns. But this way you can know exactly what your challenges are and what you need to do to make sure that you're in the best position when you're ready to pull the trigger.
Fantastic. Thank you so much for that. Let's switch gears a little bit and talk about current market trends. And we've seen interest rates rise and fall and, a little bit of this. Can you shed, a little bit of insight as to where you believe interest rates are heading? Everybody is saying, oh, they're going to come back down. They're going to come back down. What would you recommend? Would you recommend waiting before you do a rate lock? Would you recommend, locking in now and then, floating it down, as I believe you can do a free one-time float down? Talk a little bit about interest rates and what you're seeing in your market.
Yeah, so this is the hot topic, as I'm sure you're aware. I mean, everybody's clamoring, what are the rates, where are they going to go, up, down, and it's been a whirlwind, to be honest.
Yeah.
There's been a very strong economic indicators to show that rates should have been coming down more than they already did. However, every time something from the political standpoint happens, all of a sudden rates jumping back up. The market's then saying, what happened? Tariffs, right? No one knew. How's that going to impact the market? Are they going to have 250% tariffs on all goods from China and everybody's freaking out? And the reality is that didn't actually happen. A trade deal was agreed and that didn't happen. But when it was first announced, rates jumped back up. When a trade deal was announced, rates didn't really come back down. They kind of hung back at that high level. So there's so much uncertainty and there's so much concern as to where things are going to go that it's very hard to give an accurate assessment as to what's going to happen in the short term.
Right.
In the long term, rates almost for sure will be trending lower and will get better. In the last week or two, we have seen rates starting to come down slightly, but positive, but trending very positively. The 10-year Treasury was at 4.5. Today, it's at 4.28. So we're moving in the right direction. And if anybody was, not sure how to sit there and track interest rates because it's not so easy to find them, look at the 10-year Treasury. As the 10-year Treasury starts to get lower in terms of the lower numbers, it was at 4.5, now it's 4.2, starts breaking below 4, we're going to start seeing an improvement in rates. If we start seeing a 3 handle on the Treasury, that'll help. In regards to whether or not to lock in the rate, I'm advising clients to float. I think it's more likely that rates will be lower than higher over the next short period, not by a significant margin, though. I think that we're looking at an 8 to 18 months before we're going to see a significant improvement in rates. And everybody's like, so where are they going to be? Where are they going to end up? I mean, the crystal ball's still broken, I wish I knew that for certain.
Right.
But I'd like to think that we're going to be ending up in the low 5 ranges, high 4s, low 5s is where it's going to stabilize. But it could be another year out before that happens. And then the next segue is everybody goes, oh, so I'm going to wait to buy until rates are lower. And the reality is, if you wait, the prices of the house are going to go up. And if the price of the house goes up $50,000, you sat there and you missed the opportunity, as opposed to refinancing, buying it now, and in a year from now, you'll refinance. And yes, there are closing costs to refinance, but on average, and this is just a rough average, let's say it costs you $10,000 to refinance. Yeah. You roll that into the loan amount, though you don't feel the pinch of it. It doesn't come up out of pocket for the most of the time. And therefore, you can refinance and get a lower rate, but you're not spending $50,000 more on the house. So you're coming out way ahead of the game by buying now. In the short term, I am telling my clients not to lock to float, and I hope I'm right.
Okay. I love it. I have a feeling you are. So let's talk about the luxury real estate market and a little bit about new development. So we have, there's a new dev surge, lots of beautiful new development condos here in New York. We have a lot of luxury, home buyers that are purchasing $5 million and up. Okay. And they're, some of these borrowers are putting a hefty amount down as far as the down payment, and, and financing maybe only 60% or 50%. But let's talk about two things. One, see, some of these are self-employed business owners. Okay. So what are you looking at when you are qualifying a high net worth individual that owns a business that maybe shows, reduced income tax returns to obviously, guard their tax liability. So I want to talk about that first. And then I want to talk a little bit about how you qualify new development properties as far as, the ratio as to how many units are sold in the building, warrantable versus non-warrantable, and touch a little bit about, that as well.
Sure. So I like to sit there and be very upfront and very direct and very honest. That's my personality. I like when people treat me that way. And it's important to note that the area that I'm not a great resource is if you have a high net worth borrower that's moving millions of dollars over to a new bank and his tax returns show he makes a lot of money. That's not my client. That's not where I'm going to be super aggressive. Excuse me. There are private banks out there that will sit there when a client moves over $1 million that will drop their rate 0.75%. Because they want that client to come into the bank and they want to do other business with that client. All we do across country is strictly mortgages. We don't have deposits. We don't have checking. We don't have savings. So that high net worth client that his paperwork all lines up perfectly and is moving money, I'm not the right fit for that client. If there's an issue, it's a problem, they don't meet the bank, then yes, 100% I step in. But for the most part, a lot of these clients, like you said, they're tax sheltering and they're not reporting their income or reporting as little of their income as they can. And a lot of these high net worth borrowers have a lot of different companies, a lot of different entities. They're busy with making money in a lot of different directions, a lot of different ways, and their tax returns can be very, very complicated. A big example of that is real estate developers and real estate owners. They're constantly sitting there buying the next property, developing the next deal, and they're showing huge tax losses because of that. And eventually it catches up and they're reporting a lot of money, but on paper, they're showing losses. So we have some very creative programs, particularly, as I mentioned earlier, the non-QM space, where I'm going to look at their business bank statements and I'm going to qualify them based off of their business bank statements. And I don't need to look at their tax returns. I've had clients that literally had 100 different businesses that they had more than 25% ownership interest in, and they would have had to provide all those tax returns for 100 different entities. And they're like, Harvey, I don't want to be busy with it. What's the solution? I said, for 0.5% higher in the rate, no tax returns needed at all. Yes, sign me up. I'm in. I don't want to be busy.
No questions asked. Done. Yeah.
Time is money, right? For all of us. There's a value to that. And a lot of these high net worth clients, they just don't want, they don't want someone invading their privacy to that level and picking apart their whole financial situation. And they want the streamlined, easier process, and they'll pay you a slight premium for it. And again, the key is it's a slight premium. It's not this huge premium that instead of paying, I'm making up numbers now, instead of a 6.5%, they're paying 12. No, it's instead of 6.5, they're paying 7. So it's a small spread in the rate. And it enables them to sit there and not have to be busy with the minutia and all that complex paperwork that you might need to deal with at a bank. Now, if they do qualify in a full documentation loan, one of the things that is very important, a lot of business owners, when they sit there, they say they're making money. Their concept of making money is how much the business grossed. And I have a lot of times that a client will call me, yeah, the business made $5 million last year. Like, awesome. And then I get the tax returns. And yes, they made $5 million, but their expenses were 4.9. So what they reported after all expenses to the IRS, they only reported $100,000 of income, and that's not going to qualify them for the $2 million loan they're looking for. So from that standpoint, we need to see after all of their expenses, not after they pay taxes, but after their expenses, what's their income after expenses? What's their net income, the bottom line of their taxes that they're reporting? That's the number we're looking at from an underwriting standpoint to qualify them on a full documentation loan.
Understood. Okay, great.
I hope that answers the question. Yes. I kind of went off in a little bit of a different direction there to reel that in.
Thank you so much. Yeah, no, I appreciate you breaking it all down. That's very helpful and and great details. Thank you. So, as I mentioned, we do have a lot of new development properties in New York that a lot of my clients, particular, a lot of investors are looking at because they're very easy to rent, and they pretty much, come ready to go, pretty turnkey. So how are you able to qualify a new development property? based on warrantability and based on pre-solds?
Sure. So one of the nice things that Cross Country has is they have a dedicated condo and co-op team. And the condo and co-op team is dedicated strictly to dealing directly with the management company, with developers, and I coordinate that and arrange. And I'm the in between there, but they deal with it and they sit there and they'll make sure that we get all the documentation and advise on new developments. I'm working on a new development right now where I'm advising and guiding the developer on what they need to do, what the budget needs to look like, what the reserve requirements are, and going through that to sit there and make sure that when they're ready to pull the trigger, we're not going to have any issues. That being said, we also have a lot of products and programs for non-warrantable. Now, this could be a range of reasons why it's non-warrantable. The pre-sale is too low. They only have 10% sold so far. Major issue. You have to sit there and you have a high investor concentration. As you mentioned, a lot of investors are buying these properties because they rent very well. They rent really nicely. They command a tremendous premium. So investors are buying them. But if you have more than 10% investor concentration, it's a problem. If you have too much commercial space, again, these are all things which could potentially be problematic from a standpoint of the main bank mentality of being warrantable. We have multiple different programs that deal with non-warrantable condos and co-ops for a plethora of different reasons. Litigation, low pre-sale, investor concentration, commercial space. I mean, whatever it is, there's a big item right now, Local Law 11. After you had that horrible situation in Florida where the building collapsed, they're being very, very particular about the quality of the construction of the building, and the buildings get evaluated. See, are they up to par? And a lot of buildings need to do work. And if they haven't done the work yet, and then all of a sudden they know that they're going to need to do work, but there's an assessment that's coming, but no one knows exactly how much that assessment is, it's a very big concern to a lot of lenders. We have programs to deal with that as well. So being that out-of-the-box lender and having the ability to have multiple different programs, we can really get a lot of these funky situations taken care of, and a lot of things that the big banks won't touch for whatever the non-warrantable reason is, we can get closed.
Excellent. Wonderful. Thank you so much. So we know you've been the superstar of so many closings and have saved so many deals. Can you share a particular story where you were able to get the deal to the closing table, especially when the client thought that, it was game over for them?
Sure. So as you said, 30% of the deals that I close are deals that I save a deal, let's call it. Yeah. That's the terminology, save a deal. Yeah. That's 30% of my business. So it's a big part of my business. And I have a lot of loan officers at other companies that when they have issues, they send it to me. A lot of attorneys that send it to me, a lot of realtors, when they have issues, they know, don't give up on the deal, have Ari take a look at it. And I'll give two quick stories about how situations that I helped out with. One was a jumbo loan. Client was, working on the deal for about 2 months. And it was supposed to close. And a week before closing, the bank came back and said, yeah, underwriter reviewed your file, reviewed the 2 years tax returns, and there was a decline in income from 1 year to the next. And because there was a decline in income, they're denying your loan. Everybody's freaking out. It had been with the bank for 2 months now, and they were supposed to close in a week. Everybody was frustrated, upset, as understandably. They called me up and said, Ari, you say you save deals. What can you do to help here? I looked over the file. I looked over the situation. And I was able to sit there in that situation. I was able to use only 1 year's tax returns, which most jumbo lenders can't do. So all of a sudden, it eliminated the issue. I don't have to look at a decline. I'm not looking at 2 years. I'm only analyzing based on 1 year tax return. This was an easy one. It was an easy fix. And I was able to sit there and save that deal. Now, I called up. What I did was, because the seller was saying, I don't want to go through this again. I don't want to wait another 2 months. I got on the phone with the listing agent. I got on the phone with the seller. I got on the phone with the borrower. We had a conference call, everybody. I explained to him what the issue was with the other lender, how I'm able to do something different. And I told him that we would have the loan commitment in hand in 5 days and we would close in under 2 weeks. And we executed on that. And because I gave that commitment of how fast we're going to be able to get that done, the seller said, okay, look, if I relist the property, it's going to take longer than that to get a new buyer in anyways. I'll wait the extra 5 days for that commitment. And then 5 days from there, we closed. So in under 10 days, we closed that loan. Everybody was jumping up and down. Everybody was thrilled and saved that deal.
Phenomenal. Amazing.
I'll give you one other example. So I didn't interrupt you there.
Yeah.
One other example that was really, really helpful. I had a realtor call me up. They were trying to sell a property, and the client spoke to their mortgage person, and the mortgage person said it's going to take 60 to 90 days to close. And they went back to the realtor and said 60 to 90 days, and the person said, something's wrong. It doesn't make sense. It shouldn't take that long. Call Ari, see what he can do to help, because we need to close in 30 days. Yeah. The client called me up. I reviewed their file, reviewed their details, and analyzed their situation, and both husband and wife were both 1099 employees. So the other mortgage person had looked at their file and said, last year you showed $40,000 of income. You're now buying a property for $1.5 million, borrowing $1.2 million. You need to show $300,000 of income in order to have enough income to qualify. So you have to file your tax returns, wait for it to be on record with the IRS, execute a 4506. It's going to take time, and then we can get you closed. So I looked over the file, looked over the scenario. I told my client, you're both 1099 employees. Your 1099 show that you make X amount of income. You write off all your expenses. If you sit there and file your tax returns without writing off any expenses and you show $300,000 of income, which you say you can do, how much are you going to have to pay the IRS? What's your tax liability?
Right.
The client responds, my tax liability is going to go up from whatever it was. It's going to go up by $75,000 because they're going from $40,000 of income to $300,000. You got a big tax bill.
Oh, yeah.
So I said, what would you say if I could save you $70,000? Their eyes like bugged out of their head. They were like, what? So I said, instead of sitting there filing your tax returns showing that income, I don't want tax returns. I'm going to qualify you on one of my creative programs, which is a 1099 only. We look at the 1099. We use 90% of the 1099. We don't need any tax returns.
Wow.
The rate was 0.5% higher. So over the course of a year, they paid roughly an extra $5,000-$6,000 in interest over the course of the year because they were 5% higher. And they didn't pay the IRS anything extra.
And they wrote off the interest anyway. It's the tax.
And they're writing off the interest tax deduction. So what their actual cost was a nominal amount.
Oh my gosh.
They didn't they closed in 30 days. They saved a ton of money.
Oh.
It's that ability to be able to think outside the box and not be have blinders on.
Yes.
That saved that client a ton and a half of
Oh
money.
my gosh, that's huge. That's an amazing story. I love it. That's so creative. Structuring the loans, in that way, knowing what program you can offer them. And exactly like you said, who would want to increase their income to $300,000 in order to pay the IRS? You're shifting money out when you can do a 1099 loan, not have to even look at it, qualify them based on their 1099, their gross income. And then, they pay a little bit more in the interest rate, but they end up writing it off anyway. It's a win-win. That's phenomenal.
And you know how much closing costs are in New York. Could you imagine having additional $75,000 in closing costs?
Oh my gosh. No. Who wants that? Right.
Yeah.
Excellent. Thank you so much, Ari. That's amazing. So I want to leave with this. I want you to share either a secret or a piece of advice that you wish every borrower would know when getting into, the purchase or mortgage process. Is there something that you can share from your experience, a secret or piece of advice that every borrower should know when looking to purchase property?
Sure. So this might sound self-serving, but that's not. It's not. Yeah. This is experience talking here.
Yeah.
One of the main things clients look for, and I get this on a fairly regular basis, is what's the lowest rate I can get. Mm-hmm. They're chasing the lowest possible rate. Yeah. And I've had too many situations where clients were chasing the lowest rate and they used someone that they didn't have a recommendation to, or they used a big bank and they were under time constraints and things went off the rails. Mm-hmm. And it's too often that people sit there and say, oh, this is an eighth lower in the rate. I'm going to go there. But they don't know who they're dealing with. They don't have the confidence or know that person is actually going to be able to deliver and to get their deal done. And it ends up costing them significantly more. Mm-hmm. And it's very important to be aware when you're going into a situation. I don't care if and again, it's an eighth higher, a quarter higher, 3/8 higher. Use somebody that you know is good and can deliver. Me, somebody else, I don't know, whatever it is. Yeah. The realtors that you're working with and are referring mortgage people to you, they're referring that mortgage person to you, not because they're getting a kickback, right, which is illegal yet. They're referring that lender because they know the lender can deliver. They want to get their commission. They want to sell the property. Exactly. They want you, the client, to be happy. Yeah. The realtor refers somebody to you. If you don't have somebody, you have somebody already, great. But when the realtor's referring somebody, it's because they know that person will be able to get the loan across the finish line and will deliver and make sure the process goes smoothly and easily. Mm-hmm. And that's the important thing. And a lot of clients think that there's something going on. There's nothing going on. Right. The goal is to make sure the deal goes through smoothly and effectively and efficiently. That's a lot more important to make sure that you're dealing with someone you have that comfort level than to see an eighth lower on the rate. That's, these things, you're much better off. Exactly. It's all about your team, and it's making sure that you get to the closing table smoothly and efficiently. That goes for your attorney, that goes for your lender, that goes for your realtor. It's so important that you have that team in place if you want a smooth and successful process, because otherwise you're going to be, sinking in quicksand
and you're going to have a miserable process. But I agree with you. It's selecting those professionals and making sure that you have the proper lender and, proper attorney and everybody working on your behalf, because they're the ones that know the business and to get it done. So great words of advice. Thank you so much, Ari. We really appreciate having you as our platinum sponsor and all of your amazing insight, experience, and advice today. So thank you so much. And the best way for people to get in contact with you, if you can share your information.
Sure. So the best way to reach me is, send me an email, arib@ccm.com. It's very simple, very quick and easy to remember. It's not a long, complicated email, which is nice. Or you can call me on my cell phone, 845-304-8518. My team and I are always available and happy to help. The mortgage process, like you said, Taliya, it's very stressful. There's a lot of moving parts, and having the proper team, from the attorney to the realtor to the mortgage person, is super, super crucial. And, something else that I sit there and I'm a big proponent of, if you're a realtor watching this and you have a question, I don't care if I'm the lender on the file or not. If you have a question, my goal is to be a resource to you as a realtor. And if you have questions, give me a call. I'm happy to answer it. Regardless, if I'm on the deal, not on the deal, you hear something, you have a question about it, don't hesitate. Reach out to me. I'm happy to help any way I can, answer any questions I can.
Thank you so much. Appreciate you. Thanks for your time.
Thank you so much. Take care.
Bye.
You have been tuning into Dominate Real Estate Podcast, the $1 Million Blueprint. For more information, please visit our Dominate Real Estate page on Instagram. You can also watch the show across all media outlets, including Apple Podcasts, Spotify, YouTube, Instagram, and more. Stay tuned for next week's episode. Thank you for your positive feedback, comments, and questions, and please share this show with your network.